Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, September 7th, 2021. I'm pre-recording this just a bit early this morning. Futures are currently a little mixed this morning. They've been a little all over the place, but mostly just mixed. Dow Jones futures up 36 points, S&P up 1.5, NASDAQ down 13. So it looks like maybe the Dow will get off to a little bit better start on a relative basis. Going through today's agenda with you. Let's see what we got for today. We're going to start off with a daily market recap, go into talking technically. I'm going to look at some of the sectors for you today. Then earnings reactions. I want to go through some of the companies that had the best reactions in terms of accumulation during the day after their earnings report. And I'll go over that in just a bit. Take a quick look at some small caps that are performing pretty well. And then earnings spotlight. Got a couple companies coming up later this week. And then we'll wrap up with the three you must see. But first, let me take you over to earningsbeats.com, where if you go over and scroll down, you will see that we have a free newsletter. I'd love to have you join. This is published 3 times a week, Mondays, Wednesdays, and Fridays. It's our Earnings Beats Digest. All it takes is a name, email address, hit that subscribe button. There's no credit card required. You can unsubscribe at any time. Love to have you. It really just goes over a lot of the things that we look at Earnings Beats. So we talk a lot about earnings, talk about gaps, talk about relative strength, the things that really matter to us. I think I would consider it very educational in nature, but also providing some trading candidates from time to time if you so desire. But head over to earningsbeats.com, scroll down. Love to have you sign up there. So moving on here, let's go on into the daily market recap. Talk a little bit about what happened on Friday. Dow Jones Industrial Average down 75, S&P down 1.5, NASDAQ up 32. Maybe a little bit of a reversal from what we're seeing this morning in terms of futures. Back on Friday, NASDAQ led on a relative basis. The Dow was the laggard. This morning, it's the reverse. Mid caps down 13 points, or about 0.5%. Small caps, worst performer on a percentage basis of our major indices. Small caps down about 8 points on Friday, losing about 0.6%. As far as the sectors go, technology leader. There were only 2 groups up on Friday. Technology was up 0.4%. Healthcare up just a little more than 0.1%. Both those indices looking pretty good still. Utilities, materials, and financials. Those were the 3 laggards. And you can see in all 3 cases, essentially, we got double tops. Utilities made a slight breakout on Thursday and then pulled back. Could be a little bit of a cup, maybe a handle forming here. Materials didn't quite get, materials didn't quite get to the tie that we saw back in August. Got close, started to pull back. We'll see whether or not that rising 20-day moving average holds. And then financials, you can see the double top, pull back, maybe a handle, little cup handle. I don't know. We'll see. Need to bounce off this 38 area, though, and break back up above 39 for that pattern. All right, moving on to the 10-year Treasury yield. First of all, there's really little economic news out this week. None this morning. Thursday, we'll have initial jobless claims. Friday, we have the PPI. That's probably going to be the biggest report of the week. The August PPI expected to come in at 0.6%. If you remember, July rose 1%, a full percentage point. So August's rise expected to be less than that at 0.6%. If we look at the core PPI for August, that's expected to be cut in half from July. July was up 1%. August core PPI expected to be up 0.5%. So I think that we'll probably see things start to subside. I think that's why we've been seeing the yield sliding for the last several months. I don't believe the bond market's concerned about inflation. The stock market doesn't seem to be concerned about inflation. I'm not concerned about inflation. We'll see whether or not that's the right approach as we continue to get these reports out. But the way the Fed's been discussing inflation, the way the market's reacting, the way the market's been acting, I would suggest that you pay little attention to inflation at this point. That could change, but based on the way the market's reacting, I'd say it's not an issue at this point. All right, let's move on to talking technically. So I wanted to look at the technology group first. And I mean, there is a slight negative divergence. I look at this a little different than a lot of technicians. I mean, clearly from the textbook definition, you have higher prices, you have a lower PPI, or excuse me, PPO. So you've got a negative divergence based on the very strict textbook definition. I don't really follow the textbook definition. I have my own view of the divergences and how they work. I mean, if you want to get textbook, we could probably look back at this high, and it looks to me like that is definitely got a higher PPO at the April high. Certainly, we had a higher PPO if you go back a year ago than where we are now, and yet prices are higher. So are they all negative divergences? I don't think so. I think the PPO, it's a momentum indicator. And I think once you get back to the zero line or approach the zero line, get back to the 50-day moving average or approach the 50-day moving average, I think momentum is no longer an issue. And so you kind of start over again. And that's the way I'm viewing it right now. I see these three white soldiers right here. If you're a candlestick fan, I see those three white soldiers, the breakout, and the PPO now starting to rise with these highs. And I see momentum building. I don't see negative divergence for me. Now, again, textbook, yes, lower PPO, higher price action. But think about the PPO. The PPO is based on the 12 and 26 period EMAs. So you're only going back 26 days. If you look at the data currently and look at the data back on July 15th or so, that's about probably somewhere around 30 to 35 trading days. Well, that means none of the data in the PPO here can be compared to the data in the PPO back here. You got completely different data. Normally, your divergences should show up closer together. Like to me, this right in here in middle of July, early August, these highs and these lows, that to me was a negative divergence. I think when we went down and got close to the 50-day, PPO got close to the center line, I think we've reset the PPO. That's the word that I always use, is we've reset the PPO. Now it's much clearer when you go all the way to the zero line. So here, for me, when we were breaking out back at the end of June, look at where the PPO was end of June versus where we were back in mid-April. Clearly, that was a lower PPO with higher price action. Textbook definition of a negative divergence. Yet we kept going higher and higher, never really pulled back. I think once you get back to the zero line, your 12-day and your 26-day EMA are the same. There is no momentum in the market when you hit the zero line. So I think once you've hit the zero line, I think you should ignore negative divergences that appear. So as soon as we make this breakout, you're almost guaranteed to have a negative divergence. It's kind of like when we had this breakout here in April over the one in February. Well, right in here, PPO was lower. I don't think that was a negative divergence. It's not the way I would view it. Anyhow, just wanted to go through the technology group. I think technology still looks pretty good. Down here at the bottom, you can see on a relative basis doing pretty well also. How about consumer discretionary, another one of the aggressive groups? So consumer discretionary, I think, has been going up, sideways, consolidating. When we printed that double bottom right there, 175, that to me was pretty good indication that we were going to trade sideways for a while. And that's what we've done. We've gone all the way back up to 185, hit that resistance level, and we've pulled back a little bit. I'm expecting we're going to get a breakout. Now, what's missing from consumer discretionary is relative strength. You can see on a relative basis, the group has not been performing well. Although over the last 2 or 3 weeks during this rally, we have begun to outperform again. What the group needs is a breakout. I think if you get a breakout, then I think you've got a much better chance of showing relative strength. Communication services, XLC. We continue to trade higher. The PPO, I think, looks really strong right here coming off this 50-day test. I think PPO looks really good. Just recently went right up to what looks like about a 5-month relative high on the XLC, almost got there. We went up right to that June relative high. It looks like we didn't quite get there. Or maybe we just barely broke through, but we really need more of a definitive breakout than that. Another turn off the 20-day to a new high. I think maybe we'll get that breakout on a relative basis. All right, let's look at the financials. Now, financials topped back in June. We have broken out a little bit above it. PPO's, still positive. I'm still okay with the group. This is definitely doing better than industrials, which I'll show you in a minute. We have held above the relative low that we established back in July as we've broken out. So things are looking okay here. I don't think this is your best group, but I think things are still okay. And if the 10-year Treasury yield were to turn back up and break out above 1.42 or so, 1.4, 1.42 in that area, I think that would bode well for financials. Then the industrials, last group I wanted to show you. I don't see anything bad here. It's just that on a relative basis, it's underperforming. That typically happens when you consolidate. So you can see industrials leading the market February through May. And you can see right here, there's your relative strength. There is your absolute strength. But once we topped right about 106 in May, we have established lows down around 99, and we have continued to struggle when we've gotten to 106. So I think that 99 to 106 trading range is what we have to deal with for now. And we closed at 104.59. I will just say this. Industrials love the month of September. Historically, they also love the month of November. So 2 of the next 3 months, industrials tend to do very well. So if we do break out and we get that solid technical move to the upside, just remember, historically, the patterns would confirm the bullishness, the historical patterns. All right, let's move on to earnings reaction. So in this segment, what I wanted to do, I just wanted to show you, I tracked literally hundreds of, we at Earnings Beats tracked literally hundreds and hundreds of earnings reports. And one of the things that we did is we segregated the companies that it wasn't so much how much you went up, it was how much you went up from the opening bell. So some companies actually gapped down, but then were being bought all day long. And I'll show you a couple of those. But what I'm looking for the most part, good volume, and then mostly very heavy or a very solid hollow candle, meaning that you're closing way above the open. That to me shows a lot of demand. So I wanted to mention ABCL. This is Abcelera Biologics in the biotech area. PPO now just going positive, but after this move up, we went back down, almost tested the bottom, came back up, tested the top. You can see the sideways consolidation. Friday, we got a breakout. It's going to be an interesting stock to watch this week. ABCL, I think, looks pretty interesting. All right, next up. So let's take a look at another one, SITM. Check out this huge candle. See the volume? Now, this one gapped up, broke out, but look at that hollow candle. Look at the volume, highest volume we've seen since back in March. And look what the stock has continued to do, going higher. How about DOCS, DOCS? Look at that big hollow candle, and then look at what happened afterwards. So you've got accumulation. Anytime you get this big hollow candle like that, heavy volume, to me, that signifies accumulation. And not that we would continue going up right away. Sometimes we do. Other times we'll pull back and test the top of that gap. Excuse me. Sometimes we'll pull all the way back and test the top of that gap support. Let's see. We'll look at some more here. Task. Look at this one. Hollow, solid candle. Look what it's done since. Just not slowing down at all. GDRX software. Big move up, pulled back, tested the 20-day, now breaking out to new highs. I'm going to pull up Fastly. Fastly was one that was interesting because it was a red hollow candle. So it actually closed down for the day from the prior day's close, but it was up a lot from the open. It opened at 35, which was down from 45, but it finished back at 40. This, to me, on this kind of volume, second highest volume of the year, this looks to me to be exhaustive. like an exhaustive gap to the downside. So I think off of this last move down, we set a new low, and then look at the next 2 days as well on pretty good volume. 2 more hollow candles. I think there's accumulation that's taken place in Fastly. I actually own Fastly. Breakout above the 50-day moving average would be very bullish. Let's see. How about EXPI? This one's interesting because notice the gap up. We pulled back to about 40. That was where the buyers on that heavy volume, heaviest volume of the year, really kicked in. The next couple of days, pretty solid volume. Look at these hollow candles. That to me is a sign of really good accumulation. So from 40 to 55, and then look what happens. We go from 55 all the way back to 40. And then it starts to take back off again. So watch the area of support that is that's generated from these gap ups, these earnings related gap ups. Really important. Let's see, what else do we have? What other ones? Teladoc is interesting. Teladoc's another one that I think is trying to carve out a bottom. You can see this gap down. We went right down to the prior low, gap down, but look at the massive volume and look at that huge hollow candle. So it opens around 135 and then trades all the way up above 150 that day on crazy volume. Somebody's buying a lot of shares. The next day, pretty good volume, went up again. Then look what happens. We come all the way back down right to the gap support level here before starting to trend higher. Watch for a move over about 155. I think that would confirm a bottom being in on Teladoc. Let's see what other ones we have. How about Macy's? So Macy's made a big move up, broke out above these prior highs. So you can see prior top around 22 there. This prior top around 20 and a half. Then we got gap support down around 1940, 1930. Look at the volume that came in though, and that huge move. This would be like a line in the sand to me. Anything down around that 19 area, I think would be very, very bullish from an entry. Now, I don't know if we go down there, we could easily bounce right off the 20 and go back to new highs, but I love the action that's taken place here on Macy's. One that didn't work out so well, I mean, I want to show you some that, didn't work out great. Tilray. So Tilray, big volume. Look at that huge move right here. Gap up, but then couldn't sustain it. Comes back down, goes all the way back down to this prior gap support. Maybe we turn higher from here, but this one really hasn't done what we've seen with some of the others, many of the others. How about New Relic? It's a small cap company. And you can see New Relic. Look at that candle on earnings. Now, it wasn't the heaviest volume of the year, probably in the top 10. But that was a very solid candle, moved up, went almost all the way back down, didn't quite get down there. Now we're turning back up, trying to break out again. Let's see, how about Ramp? So Ramp, look at this gap up. I'm going to just show you on the inspect here. So the opening bell, we opened at 43.11. The low was 43.10. So there was no selling. That's pretty significant because when you get a gap up, market makers are looking at the demand coming in with an earnings report or the supply if it's a sell-off, but they're determining where they want basically to open a stock. And here we're opening at 43.11 after we had closed the prior day at 38.83. So 38.83 to 43.11, that's $4.28. It's about 11% gap up. Normally what you see is when everyone's buying at the open, market makers are providing that liquidity. They're on the other side shorting. And so normally you'll see gap fills. But the interesting part when you get these hollow candles like this, especially when there's no selling at the open and you just go up all day long, basically, when you do that, the opening bell, that becomes your support area, 43.11, not the gap support down at 38.83. I would not be looking for 38.83. Not to say that it doesn't happen. I would just say majority of the cases, I'd be looking for this top gap support area to hold, 43.11. Now, when we came down, this was a week and a half later, the low, 43.19. We got within 8 cents of that after trading as high as 48.83 that day. Literally 7, 8 trading days later, went all the way back down to 43.19. That's why a lot of times when you miss a stock, a lot of traders that I don't think are, well schooled in technical analysis, they'll chase stocks when they're making big moves, and those are usually not the best moves. I mean, sometimes you'll get lucky and they just keep going, but I really think you got to be careful because of our market maker system. Many times you get these gap ups and moves and you come back down, you retest before moving back up. So if you miss the first act, you can catch it on the second act later. Let's see if there's another one. Actually, SEAS is interesting because it's getting close to a point. I think it's pulled back close to a key area, if I'm not mistaken. Yeah. So here was the gap up. We opened at 46.51, traded up to 51.30. And you can see that volume was very strong. Came back down here. So there was the opening, 46.51. We got down to a low of 46.57. Friday, we had a low of 46.97. We're getting close to that support area where I would be looking for the stock to bounce. So SEAS is kind of interesting from that standpoint. Let's see. How about one more? We'll do this do a semiconductor. Silicon Motion, gap up, big move up. Look at the heavy volume coming in. So your support's somewhere around that, support 68.19. We got down to a low of 69.23 within $1. Again, we went from 68.19 up to a high of 81.87. So when you're up at 81.87, you're probably thinking there's no chance of going all the way back to 68.19. Well, we didn't go all the way back, but we got pretty close. So you want to be careful. Again, pay attention to the top of gap support when you get this kind of volume coming in and all that accumulation. Let's go on to small caps. So small caps, all I want to do is I ran a scan against the S&P 600, which is a small cap index. Hold on one second. So I ran this scan against the S&P 600 small cap index, looking for stocks in the index that have a scooter score above 90. So StockCharts technical rank, relative strength is good. And then average volume greater than 500,000 a day. Now you could lower that if you want to get more stocks. But when I ran that, I got 16 stocks. So I thought, okay, let's take a look at a couple of these. One, Signet Jewelers. I can tell you in the consumer discretionary space, this has been a really good performer. And just recently gapped up with its earnings above prior highs, pulling back. This is one maybe you might be able to get on the 20-day moving average, but it's been a very, very strong performer, and it is breaking out or just broke out again. Another stock, and if we pull it up on Scooter Score, this is in the healthcare providers area, but Apollo Medical Holdings. It had come down all the way to this prior support area, and you can see that PPO starting to turn up again. And now we're starting to get a nice move back to the upside. This is one from a long-term perspective. This could be a rise and then a cup. This could be the right side of a cup starting to form here. So let's go back, take a look at, see what other ones we have. I haven't looked at this Celsius Holdings in a while. This was a really good performer for quite some time. It's just broken out. I would like to have seen a little bit more volume there on the breakout, but it has broken out. PPO looks strong. If I was looking to enter, I'd hopefully get a 20-day test so I can buy it on a little bit of a pullback. LVNT, I'm going to go ahead and pull this one up. Is it this one or LNTH? Let's look at LNTH. Yeah, this one, this looks to me like an inverse head and shoulders. Uptrend, left shoulder, neckline, head, right side of the neckline. I think we could get a right shoulder in, maybe as low as 25. Maybe the 20-day, 25.95, and then price would put us down back closer to 25. Wouldn't be surprised. This is one to keep an eye on. All right, earnings spotlight. Nothing really out this morning, but I thought we would just take a look at a couple of stocks that'll be reporting later today. So first up, this is Coupa Software. And if we look on a relative basis, it started to turn up just 2 weeks ago. It was a 52-week relative low. The key here is going to be to close back above 280. I think if the stock can close above 280, that would be very bullish. Otherwise, if it can't, if it opens below 280, and especially if it has a false breakout, gets up above intraday and then comes back down and closes below, I think you got to be careful, especially given that negative action on the relative strength. Another one that'll be out later today. This is Smartsheet, SMAR, another software company, except this one's a little different in that it's at a 5-month relative high. So this one I think looks pretty good, although it is up against resistance at 85. So if it doesn't make the breakout today, if it moves back down close to that 20-day, that could be a great opportunity, especially if they beat on their top and bottom lines, which I believe they're going to do. I love the AD line. I like that relative strength. I think we're going to get a good report here. But if the stock reacts negatively and pulls back to the 20-day, that could be a great opportunity. One other stock I'll mention for tomorrow that reports in the morning tomorrow, or actually, I don't know that that's the case. I think actually Lululemon reports tomorrow afternoon. Anyhow, uptrend, sideways consolidation, AD line strong. I think you got a winner here. This is a stock that's at about a 7 or 8 month relative high, but it does have some support down at, I'm going to say 380 to about 385. I'd like to see that hold with earnings. If it gaps down below that, I'd be looking for a hollow candle to print. Also, just to note, GameStop will report tomorrow, GME. A lot of the Reddit traders, I'm sure, interested there. All right, let's move on to the 3 you must see. I tell you what I'm going to do. I'm just going to go in and I'm going to take the mid cap movers. See if we can get that mid cap. I'm going to take the one that's the top down from Friday, the top up, and then I'm going to take the one that's the lowest rating. So Riot top down, we're going to start there. And this is stock that's just been sideways consolidating. I know it's heavily shorted. The big key for me is it's got to get through 40. If it gets through 40, watch for the volume to pick up. If it does, this thing could really take off. Next up, if we go over to the movers and we look at top up, well, I'm going to go down and do, how about we do TRQ? These 5-letter ones a lot of times are over the counter. So let's do Turquoise Hill. Getting back up above the 50, it's holding its 20, which is good. Now we got to get that PPO above the 0 line. It's been 3 months since we've seen that. So breakout of this trend line, maybe clearing 17 would really do the stock a lot of good technically. And then for the last one, let's go back and we'll do the low 10. So I'm going to give you the lowest ranking mid-cap stock, GOTU. Yeah, huge gap down back in July. Going to have to get through that gap resistance area. That level is $3.99. I would not be interested until I see volume pick up and a move through $3.99. All right, that's it for me. I want to thank everybody for tuning in. I'll be back on Wednesday morning over at Earnings Beats. Simply go over to Earnings Beats, hit that Trading Places Live. You'll see the icon to join the room. Love to have you. That'll start at 9 a.m. tomorrow, and then be back here at StockCharts TV on Thursday. Have a great day, everybody. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.